All right, now we're coming back here. So this is just looking at what we just previously done, which is take care of the federal income tax withholdings. Okay. Once we solve for this is the income tax withholdings, right? The last one step here is to subtract any extra deductions. In this case, she doesn't have any, so her total that is going to be withhold is going to be $11.13. Okay. Now let's talk about what employee FICA is. Okay. Now, every individual who also has to claim federal income tax withholdings also has to put into their Social Security and their Medicare, okay? Also known as FICA, which is the Federal Insurance Contribution Act, okay? FICA for short, not FICO. We're not talking about FICO scores. We're talking about FICA, okay? We're talking about the Federal Insurance Contribution Act, okay? So where every paycheck that an individual person earns, they are also subject to put into the system for their Social Security, which is also known as old age survivors and disability insurance, okay? While we also have Medicare, which is also known as hospital insurance. Okay, these are all technical terms. However, I think nowadays it's more widely known as Social Security and widely known as Medicare. So once again, these are going to be things that you are contributing to society as a whole. Okay, this is for your retirement and for basically for when you do retire. Okay. So once again, what you need to know for this class is that for Social Security, you are to withhold 6.2% of the individual person's paycheck, okay? And by law, right, the company must also match them 100%, okay? And we'll talk about company taxes in a bit. But for this one, so since L has earned, right, up to, she earned a total of $686.25, right? It's going to be taxed based upon the total gross earnings, not tax earnings, gross earnings. So in this case, right, under Social Security, since she earned $686.25, 6.2% of that is going to be subject total of $42.55. Okay, so that's how much she's going to contribute to her Social Security at the end of every paycheck. Okay, you cannot claim more and you cannot claim less. Okay, you are obligated by every piece of paycheck that every individual is subject to a 6.2%. Now, for any extra benefits, so if you do have a retirement plan that your company offers, you can put up, I believe, as much as up to 6%. I think that's the maximum that they can put up to into your 401k. Okay? But in this case, we're not talking about that. We're talking about what the government's going to be taking away from your paycheck that is a federal requirement. So in this case, right, if she can only claim up to $42.55 per paycheck, there is a cap limit on how much an individual can actually put into their Social Security. The cap for 2021, okay, is now $142,800. That is the cap that stands today in 2021. Okay, every year this amount rises. Now, once again, we also talked about in the future, there might not even be Social Security anymore. All right. So with this for now, in 2021, we still have Social Security. And right now, the maximum that you can contribute to it is $142,800. Okay. Your Medicare, okay, is going to also be a percentage. It's going to be 1.45% of your total gross earnings. All right. And in this case, there is no cap to how much insurance you can actually claim up to. So you can keep putting it as much as you want. Okay. So once you reach your cap for Social Security, which nowadays, most people who work now, they're barely making the minimum wage, so they will never reach this amount at the end of their career. Even if they worked for 60 years, they'll never reach this 142,800, okay? Only individuals who make a large amount will get this, right? Because once again, it's based on the gross earnings. So people who are more salary based that actually earn a lot of money will eventually get to this cap. But regular blue collar workers, you'll never reach this number. But for Medicare, you don't have a limit. So if you reach your Social Security, you can continue to contribute to your Medicare as much as you want. No limit. Okay? And once again, it's a percentage. It's 1.45% of your total gross earnings. So in this case, if L made $686.25, multiply by that 1.45%, $9.95. Okay? So those are all the taxes that are federally that you must take away from your paycheck. Okay? So this is how we journalize it. We're going to claim this as an expense because that's what it is, right? When you pay your employees, it's all going to be an expense that you have to incur for that month. So in this case, it's going to be called salaries and wages expense. Okay? And how you're going to be deducting this, once again, you are, as the company, responsible to put in this amount for the employee, okay? Because you're collecting it for a reason, and the government is going to come after you for this money. So in this case, federal income tax withholdings, right? This is what you have to withhold from their paycheck, $11.13. You also have to withhold from them their contribution for Social Security for the $42.55 and their Medicare for the $9.95. So in grand total, she has earned up to $686.25, but after deductions and stuff, at the end of the day, you are going to pay her $622.62. So that is after all the taxes. And this is just the bare minimum of a typical part-time or a company that doesn't have any benefits. This is the bare minimum requirement because these are all federal taxes that you are obligated to have to pay. Other places, such as California, New York, they all have a separate state tax, okay? California, they have to pay into their own disability insurance and then their own, depending on what it is that they have other California taxes that they have to pay, okay? And you can even be subject to have to pay into local taxes too. So, for example, right, if you live in San Francisco, you have to contribute a portion of your paycheck for the public train system. Okay, so that's another addition to a federal. In this case, it's a state local tax that you are subject to have to take away from your paycheck. So once again, it's very, very, I guess per case basis. But for here in the state of Nevada, we do not pay state tax. It's only federal, and this is the bare minimum that you are required to know. Okay. Any questions in regards to calculating employee taxes?
I'm sorry, the information for the Social Security percentage and all that is on all the downloadable files that you gave us, correct?
No. It is on this what do you call it?
It is on. We're gonna process payroll on our project, correct?
Correct. So it's a number you're gonna have to remember because once again,
Got it.
I have a review sheet. So at the end of it, gives you the percentage. It is it is you're not gonna find it in the downloadable files because that's something you're supposed to know. But the
Mhm.
one that you'll know for sure is that I will provide the tax tables.
Okay,
So if
thank
I
you.
say it's a single woman, I will provide the single table. Okay.
Thank you.
But the percentage for it is all something that you're supposed to memorize. All right, so there you go. This is what it looks like. So everything that we have here, right? They're all payables because once again, these are money that we're collecting from the employee to pay in for them to the government. Okay? So that is how we calculate employee taxes. Now, next is employer taxes. Okay? So we have a responsibility that we must pay into as a company for having employees. And the very, very first one is you have to match the employee's amount of FICA. So for whatever amount that they put into their FICA, you must match them 100% and put into their Social Security and their Medicare as well. So as we just talked about it, right? There are two ways that you could calculate it. You could, since we've already calculated from our employee, we can simply just take those numbers, combine them together, and call it company FICA. Because at the end of the day, you're all going to submit it to one agency anyway, right? Because they're both dealing with FICA, all right? And usually that's going to be the Form 940 or 941, okay? Now, yeah, and then so how we're going to actually calculate this is once again, it's going to be based on the employee's earnings. So, for example, right, we still have L. If she's earned a total of $686.25, therefore, we have to match her 100% on the amount of Social Security and the amount of Medicare that she has contributed to hers. So in this case, right, 6.2% plus additional 1.45% gives you a total of 7.65%. Okay, and which is pretty straightforward. You just multiply that and you get a total of $52.50 that you are subject to pay into her Social Security and Medicare. So, as I mentioned before, every person earns a different amount of rates. Every person has their own amount of claimings. So for every individual employee, just because L earned $686, that means the next person could earn $850. The next person can only earn $400. You have to calculate each individual per basis. So in this case, you're going to be contributing to her Social Security for $52.50. Okay. Other things that you have to also be subject to pay into is going to be the federal unemployment tax and the state unemployment tax. Okay. So for all those people who's always claimed that, hey, I paid into my federal unemployment, so they have to give me unemployment. No, you did not put in your paycheck into the federal unemployment. The company does. All right? All you contributed was your time. Okay? So in this case, right, this is required by the federal, once again, to provide, once again, the unemployment, right? Because as a responsibility, as a company, is that for your employees, if they do for any reason get it either fired from the job, you have to support them through the Federal Unemployment Tax Act. Okay? So once again, this is going to be anywhere from 0.5% to 6%. And where this amount is, it's actually based off of how many people are in your company and how much overall taxes you actually owe in regards to just federal taxes in general. Okay, so if you have 100 employees, and you're more likely to have to owe a lot of federal taxes, they're more likely going to give you a higher percentage. okay? And then if you're a smaller business that only has maybe less than 10 employees, you're going to be taxed at a lower percentage, and of course you have lower amount of people in your in the office. So once again, all of these taxes are going to be subjective based on how big the company is. And most companies, once again, if they are a small business, mostly they're based off of the $2,000 limit rule. So it's going to be based every $2,000 that you owe, it's going to be a percentage of. So in this case, oftentimes, instead of having you guys have to figure out what the federal unemployment tax is, I'm just going to say just memorize 6%, because in this case it makes it much more easier because it's an easy number to remember. And once again, if you are having a company, your best person to turn to is going to be your tax accountant, and they're going to let you know exactly what your federal unemployment tax percentage is. Okay, so it's anywhere from 0.5% to 6%. And once again, it's going to be based on the individual's gross earnings. Okay? So once again, each federal unemployment tax is going to be based on an individual level. It's not one whole entire person, one whole entire all your employees in general. It's based on how that person worked and what time they invested in there. Okay? So once again, you did not put your own money into federal unemployment. You just only dedicated your time for working that company. So as far as making those kind of claims, just understand that the company is responsible to pay in. And if they don't pay for it, at that point, it's the company's problem, not yours. Okay? So there's that right there. Now, depending on the state that you also live into, you may be subject to also state unemployment tax. In the state of Nevada, it is called the state unemployment insurance. That's okay. They all mean the same thing. SUTA, SUI. So they all mean the same thing because it has unemployment, whether it's insurance or tax. Okay, it's the same thing. Again, there is an amount that you can collect up to. Most new businesses, right, their rate starts off at 3% in the state of Nevada. So all new businesses are going to start off at 3%. Now, what the rate can go up to, once again, is going to be 0.25% or could be anywhere up to 5.4%. Okay, this number could actually change. I think I did change this for the 2020 version. So claiming up to $33,400 is what you can do for state unemployment tax. Okay, and that's going to be based on that. Now, once again, it's also going to be based on how often you owe the state. So, for example, sales tax, you owe state sales tax. So in this case, it's going to determine what your percentage is. But for you guys, since we are going to be looking at a new kind of business, we're going to be subject to 3%. Okay, so those are the two numbers I need you guys to know. FUTA, 6%, SUTA, 3% of the total gross earnings of an individual. Okay? Last but not least, we're going to be talking about other deductions or other things that you can be subject to take away from a payroll. Okay, so for example, if you offer vacation pay, sick pay, those are going to be obviously things that you have to pay for. Insurance, whether it's health, dental, vision, oftentimes you have two choices. It's where the company pays for it 100%, or there could be a split payment between you and the company. So again, if you do 50-50, that means 50% of the time the company pays and you pay the other 50. That's going to be considered something that you could take into consideration when you're calculating taxes. Okay. Now, again, 401k plans as well. Now, it's actually, I've never heard of this, but most corporations, they only pretty much typically offer any 401k or the other types of 401ks, but never an IRA. An IRA is more on an individual level basis where you personally create your own individual retirement account, where a company doesn't do that. Usually it's more known as 401k, right? All of these are going to be tax deductions that you're going to be taken away from their paychecks and must be calculated. Once again, in this class, I'm going to assume no benefits, but the one thing that you need to do is at least have workers' compensation. You definitely do not want a worker to come after you if they get injured on the job. Okay? So, for a safety measurement for the company to protect themselves, right? Besides signing liability waivers, right? Because those can be revoked if they pull you into court. The best way to have that safety preventive measures is to have a percentage of that person's person that they've earned, right? Whatever gross earnings, you're going to take that amount and you're going to pitch in for their workers' compensation. So if they get injured on the job, you have the money to pay for their medical insurance, okay? You definitely do not want them to come after you and sue you because you didn't pay for their medical insurance, okay? So that is definitely something that you want to utilize in your company is a workers' compensation. And in this case, the minimum is 1.36%. You can have a maximum of whatever percentage that you want because, once again, it's based on the company and what your job does. If you're in the construction company, you better pay more than 1.36% because they can get injured on the job. They can get their hand sliced. Their medical bills can be a lot more extensive than someone who's just doing a coffee business, right? They can just get a burn on their hand. All right. So once again, for this class, I only want you to know 1.36%. That should be the baseline because depending on what company you are, right? And looking at how liable you are for your employees. So once again, I'm going to say that it is mandatory to have. So 1.36% is going to be that number. So once again, now we're going to take a look at how we're going to be calculating our employers' taxes, right? We talked about this. First thing is going to be is federal income tax. Federal Insurance Contribution Act, which is going to be contributing to their Social Security and Medicare, which we calculate to be $52.50. Okay. Other things that we have to pay into is going to be their unemployment. So in this case, we already calculate 6% of L's earnings, which is a total of $41.18. Okay. We also have to pay into state unemployment. So once again, DETR is a state agency, not federal. Okay. So therefore, we must pay into them 3%, which is $20.59. Then last but not least, for a safety measure, we are going to have workers' compensation. So we're going to pay into it for 1.36%, which is a total of $9.33. So once again, all of these are going to be considered payroll tax liabilities. Okay? It's going to be an expense account because these are the taxes that you are subject to have to pay for having this person be an employee. So for her, not only do I have to pay her $686, I also have to pay an additional $123 just to protect her as a employee. So let's think about it. That person already claimed up to $900 already. And think about it. You have to calculate this on an individual per basis case. Okay? So think about it. Having employees and having to keep track of their taxes that you have to put into them to protect them costs a lot of money. And that is why a lot of times, a lot of companies, they rather hire independent contractors for that reason because they don't want to be responsible for these individuals at all. Okay?
So this is where the company contributed for unemployment.
Yes.
They say.
This is where the company contributes to their employment. Yes.
Okay.
Mm-hmm. Mm-hmm. Not, it doesn't come out from their paycheck. They don't contribute anything except for their time. Okay. So this is how we journalize it, because all of these again are going to be money that we're contributing to the government themselves. Okay, so we're going to make a payment to the federal, which is the FICA and the FUTA, and we're also going to make for state is going to be your SUTA, and as well as workers' compensation, because that's also a state agency. Okay, because you need to find a workers' compensation claims or an agency that takes care of those kind of claims. So you have to pay into them, right? Any questions in regards to everything that we learned here for employer and employee taxes? Okay. No? Okay. Now, once again, this is going to be a very tiny section. I'm not going to have you guys memorize it, but just being able to know that when the day comes around and you need to file your taxes, you need to have your 940, 941. For if you have independent contractors, you need your 1098s, as well as your 1090s. Okay, all of those forms that you need to collect, your W-2 forms from the actual for the actual employer. You need all of those information to file for your taxes. Okay. Now again, the 940 and the 941, those are more geared towards paying for federal taxes. And once again, as your company is going to be responsible to make those payments, it really depends once again on the size of your company, how many employees you have, because that's going to determine how often you need to pay the government. Most cases, right? When you download the form for the 940, they do tell you that your standard date for all turning in everything that you need to turn in is going to be January 31st for the tax year. Now, that's just turning in everything, but you making your payments is going to be, once again, based on how many employees you have, how how much you owe, and how they do it nowadays, it's through an electronic funds transfer. So everything's done digitally, and you set that up through the IRS by you have to go through talk with your tax accountant at the IRS, and they'll set up the payroll transfer system for you. Okay, because once again, think about it, a corporation, that's the easiest way to get the money, because they're going to have billions of employees. So therefore, billions of employees equals billions of pay tax dollars that they can claim. So they're going to go after them a lot more quickly than for someone who's a small business that only has 10 employees, right? You can easily get away with paying the government every quarterly or even every half of the year, even at the very end of the year. Okay, it just really depends on how much you owe. Okay, so once again, by you filing this tax form for the 940, basically that's just to give you your overall the W-2s that you're supposed to give to your employees. That's where all that is going to come from. Okay? So there you go. Review. Here are what we've learned today. We learned about what the different types of employees are. Okay, we know that common law and statutory employees are going to be considered people that you put on your payroll. Okay, and what the payroll entails is that you're going to be subject to have to pay into federal income tax withholdings. You're going to be subject to pay FUTA, SUTA, workers' compensation as an employer, but as an employee, they're subject to pay federal income tax withholdings and their FICA tax, and that's it. Okay. Other things that you want to know here for federal federal income tax, right? It's going to be based on the percentage method, which we're going to be using our circular E table for, which will be provided. You can also obtain it from the irs.gov, but I provided it on the Google Classroom. Okay. FICA taxes, we need to know that Social Security is 6.2% and there's a cap of 142,800 for this year, where Medicare is only 1.45% and there's no limit. Okay. Then we talked about FUTA, which is the federal unemployment, SUTA, state unemployment. Once again, FUTA, I want you to know it as 6%. SUTA, I want you to know it as 3%. Workers' compensation, 1.36%. If you would like to know much more about the different types of employees or how they're going to be taxed at, please visit irs.gov/publication15. And that's going to give you everything that you need to know about having employees, how they're going to be taxed, and what you can do with those tax dollars. Okay? All right. Any questions?
Nope.
All right. So let's go ahead and dive right into the exercises. So we have the next 20 minutes to go through everything. Okay. So number one, we're going to be calculating once again employee taxes. Okay, we're going to do that first, and then we're going to do employer after. So number one, employee, right? We have an employee named Bob, and he is married. He's a married man with 3 dependents, okay? And he files as head of household, all right? And he only has one primary job, okay? And he earns $19.50 an hour. And he worked a total of 72 hours this pay period, okay? And the payroll period is going to be bi-weekly, so he gets his paycheck every 2 weeks, okay? And then again, use the tables down below to help you answer the next question. So once again, he is married. Okay, all right. He is head of household, and that's what he claimed. He claimed as head of household instead of married. Okay, so in this case, let's go ahead and take a look. So first things first is we need to calculate his total federal income tax withholdings. So number one, right? We need to determine what his gross earnings is going to be. So if he's making a total of $19.50 and worked a total of 72 hours, so $19.50 times 72, what's his total gross wages?
$14.04.
$14.04, okay? Once again, step 2 is if he has a secondary job or if he's going to contribute his marital status. In this case, he's the head of household, so he's the primary income. He doesn't have any extra jobs or anything like that. So let's take a look here. So that means his gross earnings is all that we're going to be looking at. Okay. So the next step is determining the table that we're going to use. So once again, I provided the bi-weekly head of household table. All right. Now let's go ahead and see which column he belongs to. Okay. Or which row he belongs to. So if he earned a total of $14.04, let's see. Did he earn more than $723? Yes, he did. Did he earn a total of more than $12.69? Yes, he did. Did he earn more than $28.08? No. So that means he's going to fall under this row right here. Okay? And I'm going to highlight it so we can keep track of it. So boom. Therefore, he's definitely earned more than $12.69, but he's definitely earned less than $28.08. So let's go ahead and follow up the steps. First things first is he gets to claim $12.69. Okay, he gets to keep that money. So here we go. First things first is, so we're going to take his total amount that he earned, okay, of the $14.04, and we're going to subtract the $12.69 because that's what the government lets him keep. So in this case, what's my total that he's earned in excess?
$135.
$135, okay? Next now is we're going to take a look at what bracket or what percentage he belongs to. In this case, he's going to be claiming 12%. Okay, so that means whatever dollar that he earned in excess, which is the $135, is going to be subject to be taxed at 12%. So in this case, what is 12% of $135?
$16.20.
$16.20. Okay. And then last but not least, let's see how much the government's going to claim from him regardless of his earnings. He's going to be subject to $54.60. Okay, so there you go. You're going to take your $16.20 and you're going to add that $54 and what was it? 60 cents. Okay, to give you a grand total of federal income tax withholdings to be
$70.80.
70, 80. All right. Now that's just what the potential is. Okay. Now in this case, he has 3 dependents. Okay. If he has 3 dependents and he's going to claim all 3 of them, right? The rule is it's going to cost $2,000 per individual per year. So in this case, if he's going to claim all 3 of them, okay, right? So he claims all 3 dependents. Okay, that's what it says on his W-4 form. Therefore, $2,000 times 3 gives you $6,000, right? We're going to take this amount and we're going to divide this by the total number of payments that he's going to have, which in this case, how many payments should he be receiving if he's on a bi-weekly payroll?
24, right?
Bi-weekly.
26.
He's going to get a total of
26.
26 paychecks. So in this case, 26. Okay? Now let's go ahead and calculate that. What is 6,000 divided by $26? 26 months. Or 26 paychecks.
$230.77.
Okay? That's how much he needs to withhold. Or in this case, that's how much that he needs to be taken off or withdrawn. Now in this case, right? We're only supposed to take $70.80. In this case, so the condition here is that if he's already at $70.80 and you're subtracting $230 dollars per paycheck, that means, right? Since this is a negative number, right? What is this number?
Negative $159.97.
Okay? That means in the rules here, it says that if the amount that you deduct for having the children falls less than 0, you're going to treat this as 0. So that means for federal income tax withholdings, we are not going to withhold anything because he's going to claim his entire check to himself because he's claiming 3 children. Okay? And that's how we calculate the federal income tax withholdings. Okay? So that's that one. So let's go ahead. So that's my FITW. Right? Next thing I'm going to do is calculate the Social Security and the Medicare. So once again, what percentage is Social Security?
6.2.
6.2%, right? So in this case, right? What was his total earnings?
1404.
1404, right? And we're going to multiply that by 0.062%, which will give me a total
87.
8.
0.048.
Okay, so 0.04, so 5.
5.
Okay? So that means he is contributing $87.05 to his Social Security. All right? How much is Medicare?
We get 1.45.
1.5. Yes, that's correct. So in this case, if he's earned a total of 1404, we're going to multiply that by 0.0145%. Okay? So how much how much Medicare is he going to be contributing?
$20.36.
$20
And 36 cents.
and 36 cents. Okay? So there you go. That's everything that we're going to be taxing him for. So now let's go ahead and journalize this to record our payroll expense. So in this case, right, no date was given, all right? But what is the journal entry that we should be looking at? So first we're going to have to claim our very first expense, which is going to be
That would be the first one. The go up a little. No, I'm sorry. Yeah, okay. His first expense is his first go down. Yeah, right there. Is his first expense the withholding for taxes?
so all of those are not expenses to the company. Those are all going to be liabilities.
The first
So
thing
his
you put in there is the paycheck and how much is he's getting get paid, correct?
That's going to be the
No.
very last thing.
so what is his very first expense? Is it the Medicare?
No. So all the things that we calculated are not going to be expenses. They're going to be things that he's contributing to his pay to those things. They're going to be liabilities because he's basically telling us to withhold it and submit it to the government for him.
It's right there on top. Payroll tax expense.
Not payroll tax expense.
Retirement expense?
Not retire. This isn't retirement expense. Federal income tax
Social
is not a
Security?
withhold. No.
Go up a little. What is his? I can't. All I see is Medicare. So what is his first expense?
How about salary and wage?
Salaries and wages expense. That is correct. Okay?
Oh,
Because that is what we have to pay, right? This is our responsibility as a company that we have to pay into salaries and wages expense.
so that's not his expense. That's the company's expense.
Right. Because we owe him a total of 1404. Am I
You
right?
said what is his first expense? So that wouldn't be his expense. That would be the company's first expense, right?
Okay, in logistic context, yes, that is correct. Sorry if I said that and it confused you, but in this case, what's my idea here is what's the first thing I'm going to journalize? We have an expense because our duty is we need to pay our employee. Okay, so that's the first expense that's the first expense that we should recognize in general is that we have to pay our employee. So therefore, we have a salaries and wages expense. And this is going to be based on the total amount that he earned. Because right now, we're supposed to owe him 1404. All right? But because he is subject to pay into all these federal taxes, right? So what's his first federal tax that he has to pay to?
Federal income tax.
Federal income tax, which I'm going to do FITW for short. All right? And it's always going to be a liability because we are withholding it. We're going to be paying into the government for him. Okay? What else is going to be? So how much was the federal tax that we calculated?
If you go up, we can see $70.80.
Okay, no, that's before he claimed his dependents.
$135.
135. No, that's his amount in excess.
I'm sorry. What was the question again?
What was his federal income tax withholdings?
It wasn't the 135.
That's how.
income tax.
Okay.
Oh, we the $70.80.
That's before he claimed his kids.
$16.20.
That's what the $16.
Right
No,
there with that.
no,
Okay, if we don't get it, just let us know. Is it the zero?
it is zero because remember he claimed his children.
Well,
If he didn't claim his children, then it would be $70.80. But he claimed three of them,
so
so
he get paid all the money or
he's taking all the money.
wow.
Yeah.
So
So in this case, he's not withholding anything because he claimed three children. Okay. So in this case, his federal income tax withholding is calculated as zero because that's what he claimed three children at the end of his taxes. All right? That's the new system, right? You claim your children at the end, not before anymore. Usually, it's before taxes. You take it away from your gross earnings. Now in 2021, you claim them at the end after you've been taxed and everything. Okay. So there you go. Federal income tax withholdings is zero. What was his social security?
8705.
Social security payable. What was that? $87.05. Okay. And then last but not least, what was the Medicare?
2036.
2036. So therefore, last but not least, I need to cut him a check because I owed him 1404, but I need to withhold all the taxes. So in this case, how much is this check actually now worth?
$12.96.59.
1296.59. Can other people confirm that's true? That looks right. I think. Yep. That looks right.
Yes, it is.
Okay. 1296.59. He's walking away with 1296.59. All right. Now that
so
was just employee taxes. Go ahead.
uh, if I am, I don't know if I'm asking you in advance. In this case, so at the end of the year, he own a tax, right?
Oh yeah,
So
definitely 100%. Yes, 100% because once again, every dollar that you claim at the end of the year, more than likely, you will be taxed. You
wow.
will get taxed. You owe tax.
So most likely they're gonna apply it from his child income tax.
Yes. Now, again, there are other ways around it. He's claiming it now, that he wants the money for his children now.
Okay.
Where there's also that possibility where you can claim your children at the end of the year. But in this case, he's probably thinking because he's the head of household, he has three mouths to feed, he needs to take all the money now. So that's what he's claiming. Okay? He can't wait till the end of the year to get a tax refund. No. Or the money that he's making now isn't enough. Okay? So, yes. All right. So that was just doing employee taxes. Okay? Now let's talk about employer taxes. So again, all of this is going to be based off of Bob's income. So if Bob's income was once again, right, the total amount that he earned was 1404. Okay. So then what is the total company FICA that we're going to be contributing? Okay. It's going to be 7.65%.
Yeah.
Or, right, we already calculated up here, right? What is 8705? 8705 plus my $20.36.
107.41.
107.41.
Mm-hmm.
Okay, 107.41. Well, in this case, most cases like they just combine it to each other because at the end of the day they're just gonna send it out. You can claim them separate. It's up to you. Depends on your company, right? In this case, we have other taxes that we have to also claim too. So in this case, because he contributed to his own Social Security and Medicare, we need to match him 100%. So we're gonna be also contributing $107.41 to his Social Security and Medicare. Okay. What about FUTA? Okay. What is the federal unemployment rate?
6%.
6%. So in this case, how much am I going to contribute?
6.44.
Say that again. 6.
6.44.
I think it's a lot more than that.
No.
Oh yeah, never mind.
I got
Wait, never mind.
0.884. I got 0.8424.
It's definitely more than 8. It's definitely more than 8 cents.
84.24.
84.24.
$84 and okay.
Yes, $84.24. Okay. Now, what about state? Okay. If
We have credit.
good, if you think of it that way, it's half the amount, or it's 3%. So in this case, how much is going to be my state unemployment tax?
42.12.
42.12. Good. All right. Last but not least, we want to protect our company. So what is the amount of workers' compensation that I am going to be subject to pay? What's the percentage?
3%?
No,
No, 6%?
that's
No.
FUTA.
It should be 1 point, less than 1.2.
1 point.
Uh, 26 or 36.
36. Good. All right, 1.36. Okay,
Hey, how did you get that?
it's a given number. It should be on your
Oh,
PowerPoint.
okay.
Mm-hmm.
All right.
All right. So what is this 1.36% times the 1404?
$19 and 1 cent. Let's say.
1901. Okay. So let's go ahead and journalize all of these taxes. Now, once again, this is where you can claim your payroll taxes now. So this is payroll tax expense. You can do payroll tax liabilities, payroll tax expense. In this case, it's payroll tax expense. Okay. So first things first here, right? I'm going to push this forward so we can have enough space to see everything. All right. First things first, now that we have payroll tax expense, right? What's the first thing that I am subject to pay for? FICA. Good. So in this case, I'm going to refer this as company FICA because that's the amount that the company is going to be contributing. All right. And this one is for how much?
107.
107.41. Okay. Now, what's the next thing I'm going to be claiming? Or in this case, what am I going to be paying into?
Federal unemployment tax.
Yes, federal unemployment. Okay. So in this case, I'm going to put FUTA for short. FUTA payable. Okay. For $84.
And change your 7 to a 1. Change your 7 to a 1.
Where?
It's 41 cents, not 47 cents.
Oh, okay.
Right there. There you go.
Okay. And what is the SUTA? Okay, because we have state unemployment tax that we have to pay into. Okay. Which is
Is the 4212?
$42.12. And last but not least, what is the workers' compensation that I am going to be contributing?
$19.01.
1901. Right? So in grand total, how much taxes am I subject to have to pay for having Bob as an employee? What are my company taxes that I have to pay for having Bob as an employee?
Is it the 252.78?
Did you calculate all of this?
Yes, ma'am.
257.48.
No, yeah, 252.78.
Right?
There we go.
There you go.
78 or 94, Kim?
Let me see. 1 plus 4, 6, so 6, 7, 8, 8, 6, 7. It should be 78 cents. 2, 5, 2, 78.
Okay, sorry about that.
No, you got the correct.
The right one. I got the wrong one.
Okay. So, for having Bob work here, I had to pay $252.78 just so he can work for me. Okay? That's a lot of money. Right? It's a lot of extra money. Okay? So that was that one. Right?
Can you scroll back up to question 7, please?
Question 7.
I need to look at something. Okay, thank you.
Okay.
And can you go back to the tax table? Go up, up, up. Ooh, right there. Can't we just automatically, let me see, just automatically deduct the $54.60 from the 1269 first and then the 12%? Wouldn't that eliminate a step? Because then first you do the 12% and then you deduct the 5460.
We're not
Wouldn't we
deduct.
just deduct the 5460 from that amount and then the 12%?
No, because that's we're not deducting that amount. We're adding it.
Couldn't
We
you do it off the, yeah, off the top?
In this case, no, because that's just a standard flat rate. You're gonna get taxed. You're gonna get that amount is gonna be taxed regardless of amount the money that you earn.
Hmm.
So in this case, we need to find out how much in excess you earned, and then tack on that amount. You can't deduct that from the amount of earnings because that's not what
No,
you're
not the
doing.
amount of earnings, not the amount of earnings, the amount. Um, so first you do the 135 subtracting, and then you did the $16.20. Then you went back and subtract the 5460. I'm saying, can't we just subtract the 5460?
Where do you see that I subtracted 5460?
Well, I'm sorry, you added it, but that step, couldn't it be added in the beginning to the 1269 and then the 12%?
No, because the 1269 is what the government lets us keep.
Okay, all right.
All
I'll
right?
take it from the back end.
The 135 is how much money you made in excess.
No, that's
The
that's not my question. I'm not wording it right. But when we go over it again, then I'll come back to it.
Okay, cuz the next example is not going to be like this. Okay, cuz you're not this $54.60 is what the government's going to take away from you no matter whether you
That's,
earned or whatever money that you earned. This is the amount that you're going to get taxed at immediately.
yeah, that's not my question. I'm wording it wrong. Um, I'll wait. Go ahead, huh? I'm sorry. Go ahead.
Okay. All right, so let's go ahead and do the second example here. Okay. Maybe when we go through this, you could tell me where to stop and we can figure that out. Okay.
Yeah.
All right, employee. Susan is a single woman with zero withholdings and has one primary job, okay? And she earns $25 an hour and she worked a total of 36 hours this week, okay? The payroll period is weekly. So here, the simplest as you can get. Single woman, no claiming, no dependents, no nothing, no extra anything. And she and this is her primary job. Okay. So once again, here is the table. There's no need for that other extra table because she has nobody to claim, nothing. She's claiming zero. So in this case, right, let's go ahead and calculate her federal income tax withholdings. So number one, we need to solve for her total gross earnings. So if she made if she makes $20 an hour, $25 an hour, excuse me, and she worked a total of 36 hours, all right? That's what it says. So she did $25 an hour and worked a total of 38 hours, okay? So in this case, $25 times 38 hours gives you a grand total of what?
950.
950?
Yes.
Yep.
Okay. All right. So she earns a total of $950. All right. Now it's again step 2. This is her primary job, no extra deduction. So this is the amount that we're going to take a look at. All right. So let's take a look in our table for the single on a weekly pay, single status. All right. So let's take a look which row she belongs in. Did she make more than $0? For sure. Did she make more than $241? That's for sure. Did she make more than $433? That's for sure. Did she make more than 1021? No. So in this case, she falls between 433 and 1021. So that means this row right here is going to be the row that I'm looking for. Okay? So in this case, the government's going to take $19.20 away automatically. Anything in excess is going to be 12%, and she gets to keep a total of $433. Okay? So now let's go ahead and do the step. So first things first, okay, Kim, go ahead. How do we solve for this earnings? Or go ahead and walk me through how you do it.
Okay. So she'll fall in the category between the 433 and the 1021. So then, okay, so then we're going to take that amount,
Which amount?
take her $950 amount, and times it by 12?
No.
No. We're going to subtract the 433, right?
Mm-hmm.
Okay. 433 subtract from 950. So that gives me $517.
So then where is the confusion when you were talking about this?
I see it right now. I was wrong. Okay, so then now we're going to add the 1920.
To what?
I'm sorry. The, we're going to add the 1920 to the $517.
Why?
I thought we subtracted because she owes the government not only the 12%, but the $19.20, right? So we subtract the 1920 from the 517.
Because no matter whether she earned it or not,
Mm-hmm.
that money is going to be taxed no matter what. So in this case, if you subtract that out now, that 12% is going to be based on a lower amount. And that's not what you want. The government wants their money.
Okay.
So in this
It would
case,
short her. It would shorten the amount, which therefore would cheat the government.
exactly.
Okay.
So
So
in this
that
case,
other step has to be taken
yes. So
to
in
get the
this,
correct figure. Okay.
correct. So this
So we're going to
is
subtract the 1920 from the no. Let me
no.
think. We're going to, so we did the 12%. So now she still owes the government $19.20, right?
Okay, we didn't do anything with the 12% yet.
Oh, okay. So the 12% times the 512, I'm sorry, times the $517
Okay.
times 12%, which gives me 6204.
Okay.
Okay. Now we're going to add the $19.20, right?
Correct.
1920 plus the 6204, which gives me 8124.
That's correct.
Okay.
Mhm.
So
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 we
in
don't
essence,
eliminate that step.
Kim, so
Yes,
just
ma'am.
a tip, she starts from the right to the left. So first you use the
Okay.
432, then
Mm-hmm.
the 12, and then the
And
9.
then the 1920.
so if you
Okay.
thought of it that way, that's perfect, right? So once
Yeah.
you find your bracket, right, or your row, excuse me, I keep saying
Mm-hmm.
bracket. Once you find your row, this is how you do it. You're gonna subtract letter E,
Mm-hmm.
multiply D, add letter C. Okay?
Got it.
So
Got
subtract
it.
E, multiply D,
Multiply D and
plus C.
then add, okay, the
Mm-hmm.
C. Got it.
Mm-hmm.
Thanks, Erica. That's a good way to understand it.
Yes.
You're welcome.
Right.
Yeah, thanks, Erica.
So once again, that's a good way of looking at it as well. Okay. And I don't know why they did this tax table to look that way. It would make more sense if you just went A, B, C, D, and E, right? But in this case, they work backwards, right? So you're gonna be A, B, then EDC. All right. So there you go. She claimed nobody. So that means that is her federal income tax withholdings is going to be $81.24. See, that's a lot for being single and claiming nobody, right? So now let's go ahead and calculate her FICA, which is her Social Security and Medicare. So once again, we talked about this. Social Security is 6.2%. So she earned 950 multiplied by the 0.062%. 'Hello?
I got 0.589. Is
No,
that right?
5.58.
Pot 5.
0.58?
It's going to definitely
I
be
got
higher than that.
50,
Or is it?
I got 5890.
Oh,
58.90.
Oh,
5.90.
Okay. Okay. Good. All right. And we know that Social Security, I'm sorry, Medicare is 1.45%. So again, 950, okay, times 0.0145 gives you a total of
1377.
1377. Okay, good.
Yes.
So then now let's go ahead and plug in our journal. Okay. So now we know for us, we owe Susan some money, right? So we're going to claim as an expense to say salaries and wages expense. Okay. And we know we owe her a total of $950. Okay. But let's go ahead and list out all the things that she's going to be claiming or that's going to be taken out from her paycheck. So first one's going to be the federal income tax withholdings for 8124. So FITW for short, okay? Payable for $81.24. Okay? How much was the amount for Social Security?
5890.
58.90. Okay? And then how much was her Medicare?
The 1377.
1377. So therefore, what is the amount of paycheck she's going to be receiving from us?
153.91.
It's definitely higher than that.
I'm sorry. What'd you say?
What's the amount of paycheck that we're going to give to her? What's her? What's the checking that we're going to write her?
I got 79609.
79609.
Please check my math.
79609. Yeah, that's what I got too.
79609. Okay, so take a look at that. She earned $950, close to $1,000, and after all of her deductions, she only claimed $796, so almost $800. So right here, this is why we get taxed so much. All right, now that's just the bare minimum of what Nevada taxes us for. If the company provides benefits, Medicare, 401k, imagine you could see that your check is just going to keep dropping lower and lower and lower. So that is how much she's going to receive after taxes. Okay? So now let's go ahead and take a look at an employer standpoint. So what are the taxes that we have to pay? So we know that for us, right, it's Social Security plus Medicare is a total of 6.5%, all right, which we've already calculated, right? It was 5890 plus 1377, right, for the Social Security. So in this case, what's the total amount of company FICA that I am subject to have to pay into it for her? What do I have to match her for?
7267.
7867?
7267.
Okay, good. That's right. Okay. 72 and 67 cents, okay? Right? What's the total amount of FUTA I am subject to pay?
57.
57 even?
Yeah.
Good. Okay. What about the amount of SUTA?
I would say 57. 28.5 would it be?
28?
Yeah. 28.5. Half of 57.
Oh yeah, I got it. You're right. 8 plus 8, 16 plus carryover. Yes, 28.55. Yes, good. All right. Last but not least, how much workers' compensation am I going to be contributing to her?
$12.92.
$12.92. Okay, good. So once again, last thing that we gotta do is to journalize. So when we're gonna be journalizing this, right? We got payroll tax liabilities or payroll tax expense, whatever you want to call it. Okay. First thing that we have to is pay into company FICA, which was how much? How much was company FICA?
FICA was $58.90,
Okay, that's just Social Security plus the $13.77 for Medicare.
and the 12.92 for the workers' compensation.
No, that's not what we're looking at. We're looking at just the company FICA.
You say how much do they have to pay?
We're paying into
Oh,
them.
how much do we have to pay? The 72.67.
72.67 for FICA, yes.
Okay.
Okay. Now, how much FUTA do we need to pay?
57.
57. SUTA is $28.50. So I'm going to go ahead and write that in there. So we got FUTA payable for $57, and we have SUTA payable for $28.50. Last but not least, what was the workers' compensation?
$12.92.
$12.92. So in this case, $12.92. How much taxes am I going to pay for Susan to work for me?
171.09.
One, excuse me, 179.09.
171.09.
All right. All right. Already, I owe this person a total of 1,000 and like something dollars. Right, 1,200 just to have her as an employee. Right. Any questions in regards to payroll? Okay. So that is it.